All
So okay,
right.
to get started, I mean, step one is obviously logging in here. So I'm just going to log in using my login info. And really, once you get into the system, this will kind of be your home base. This is to get back to this page, you would simply click List, and that kind of brings you back to this page. This is where you start with your hypotheticals. You have access to all of your different areas here with My Info, Model Dashboard, and all of this good stuff we'll get into. But really, to start with the basics, you know, what a lot of advisors are using our system for is creating illustrations on client accounts and kind of using those illustrations to model what they might propose for the client and running different analytics and kind of getting proposals for investment allocations here. So to get started, the first thing I would do, starting with a new client prospect or model here, is just simply click on New Hypothetical. That gives me the ability to enter my tickers that I want to show here. So here I'll just pretend maybe this is a client that's walked in the door, and you know they have a couple of positions here I'm going to throw in. You know, maybe a mutual fund, a couple ETFs, and a couple equities here. So you notice everything comes up pretty quickly. I have a chance to review the positions, add them to this illustration. Now in section 1.4, I have the ability to title this illustration. On my allocation tab, I'm going to break down how to set up this portfolio here. So up top, I'm going to designate this as a portfolio of investments. That way our system knows to treat this as a commingled group of holdings. And I can go ahead and allocate to these positions. Here for this example, I'm just going to go ahead and throw in $10,000 to each one of these positions here. Now, our system's always going to default to the longest common time horizon amongst the assets in this portfolio. So here it's going to go back to 8/30/2009. That's the inception date for this AKREX product. That gives me some good history here. But just in case I wanted to use a different time frame, I have the ability to use this drop-down to select any of these canned time frames here. Or maybe I want to show more history on this account. I can use our common asset share class and index inception option. What that's going to do is it's going to go ahead and use the position returns as far back as it can. Once it runs out of those, it's going to go ahead and piggyback the index for the position and backfill returns, getting us more history. In this case, I'm just going to go ahead and use the standard common asset inception.
Hey, Virosh, can I jump in real quick there?
Yeah, absolutely.
When you use that option where they go back and it uses the securities history up to a certain point, but then uses the index, is there a different disclosure that automatically gets put on this hypothetical, or how do we get around that?
So that's something I'll show you as well. So anytime, if you, for example, let me go ahead and select that actually. So I'll use this one here. So we're going to piggyback the indexes and go back to 1988. And I'll kind of give you an idea of what the disclosures there would look like.
Thank you.
With that being said, here, yeah, absolutely. So on the Fees tab, I'd have the ability to enter any fees I want to show on this illustration. Let's just say, for example, maybe the client's paying 1% and they're being billed 25 basis points quarterly. You can go ahead and show that here, waive all the other fees, and apply that quickly to all the positions in this portfolio. Next tab is my cash flows. I have the ability here to show any historical cash flows on this illustration. Maybe I want to show the client the advantage of dollar cost averaging, contributing $100 a month as opposed to $1,200 a lump sum at the beginning of the year. I can do that here, so really some lightweight planning capabilities. But most of your work will be done on our Reports tab. So here, real quickly, what we've been able to do is we've been able to enter our investments, allocate to those investments, enter a fee structure, and then we're ready to start building reports. So the first report I'll show you is our hypothetical performance. Here, as the name suggests, the report's going to show you how this portfolio would have performed hypothetically over the time period we selected. By clicking on parameters next to hypothetical performance, I can kind of customize this report here. I can select benchmarks. I could show any benchmark I want from our drop-down list here. We have a couple hundred of the most popularly used benchmarks. Also have the ability to create a blended benchmark. So for example, simply by titling it, here I can make a 70-30 real quick. I'll put 30% into the Barclay US Ag, 70% into the S&P 500 reinvested. Save this model, and I have the ability to use the 70-30 benchmark that I've just created on this report output. So I'm going to go ahead and create this hypothetical performance report with my 70-30 benchmark. Everything should come up fairly quickly. It's all web-based here, and the report output is going to show me the client's cumulative return, the net investments, ending market value, cumulative return, and average annualized return over that period. Performance chart is going to show me the client's portfolio performance versus the benchmark. The summary section is going to show me the client's portfolio value versus that benchmark here. Detailed performance for the sample client account is going to go ahead and show me the calendar year performance, annualized for this client. And the accumulation detail is going to show me kind of how this client built up this money. Investment allocation without rebalancing, I didn't select a rebalance, is going to show me kind of how this portfolio started and how it ended up. So really, as we see by looking here, the great majority of the performance for this portfolio was driven by Cisco and Apple. I have initial investment as well as the ending value. And then finally here, I have the detailed performance for my 70-30 blended benchmark, showing me how this benchmark did over each calendar year as well. Next report I want to show you is our holding scan. So holding scan, if you guys are familiar with Morningstar, holding scan is similar to the Morningstar X-ray report. This is going to be a numerical way to kind of give the client a breakdown of what's going on with their portfolio. And again, by clicking on parameters, I have the ability to customize the report output here. So for example, I can select pie chart grouping. Maybe rather than class, I want to show subcategory on this. Again, I have the ability to select any benchmark I want here. I could use my 70-30 again. But on this report, or I could use anything from my drop-down list. But on this report, what I'm going to go ahead and do is use my weighted asset class benchmark. What that's going to do is the system's going to go ahead and create a benchmark for me on the fly, given the composition of this portfolio. I go ahead and build that report. And again, all fees are web-based and should come pretty quickly for you. Holding scan gives me the macro allocation up top here. That actually takes a look through at the mutual funds and all the different holdings in this portfolio, giving me a breakdown of the equity, fixed income, cash, and other holdings in this portfolio. I selected subcategory here, so I also have my subcategory allocation. So I have trailing performance, below which I have the trailing returns for both the portfolio and the benchmark. My risk versus return graph, showing me how my portfolio stacks up with the benchmark, as well as some MPT statistics on both the portfolio and the benchmark. A best and worst case analysis on this portfolio and its benchmark, showing me the best run and worst run this portfolio had over any 3-month, 1-year, or 3-year period, giving me an idea of the portfolio's upside capture, as well as its defensive abilities here. So for example, obviously what jumps out at me here is this portfolio captures a ton more upside, but also leaves you with, exposed to a lot more downside here. View equity properties, fixed income properties if they were in the portfolio, metrics, top 10 equity sectors, and top 10 equity countries, giving you sector and country exposure breakdown. Lap report. So here this shows me the Cisco. I hold that as an individual equity, and it's also in the iShares IWD product. So overlap report, really useful, maybe for clients that are holding American funds or funds that have a lot of overlap. Really gives you an ability to highlight that they might not be as diversified as they think. So now the question you have about the benchmark disclosure. So for example, on this report, I went ahead and we're running the report from 4/1/88, which is obviously, prior to inception for quite a few products in this portfolio. So the disclosure on the asset performance horizon actually shows me that the EFA product was used for performance from 8/14/01 through 11/30/15. And prior to that, the Lipper International Multi-Cap Core benchmark was used to backfill performance from 4/1/88 through 8/13/01.
Got it.
So that kind of gives you an idea of how that disclosure is broken down on what's being used to backfill there. Now, the next report I wanted to show you is our detailed analytics report. As the report title suggests, this is going to be a really detailed look at the portfolio. In parameters for detailed analytics. Can
I jump in?
Yeah, absolutely.
Sorry, real quick, one more question. You might not know this or have, I don't know how much you've interacted with Josh or the people that have licenses, but like the holding scan would be, I think, wonderful on, we get a lot of questions on current portfolios, positioning, things like that, to look at some of the, risk return stats and,
sure.
Country sector allocation, things like that. Are our portfolios, going to be like pre-populated that we can quickly look at it, or would we have to build something each time? Like, are they pre-populated and saved in here?
I actually haven't reviewed that whole process with Josh. That is something I'd have to kind of discuss with him.
Okay.
So, unfortunately, I can't really answer that for you right now, but yeah, I would hope that we would have them pre-populated with the position holdings. So if we actually have the model built with all the underlying holdings there, we would be able to get you all of the macro allocation and whatnot. And obviously, if we're working just with a trailing return stream and we don't have the underlying holdings, then that wouldn't be available on the report.
Right, okay.
But again, that's something I'll discuss with Josh, and we can cross that bridge once we get that all set up for you.
Okay, thanks so much.
Yeah, absolutely. So again, the next report I was going to show you here in our set is the detailed analytics report. And again, the ability to customize that by clicking on parameters next to detailed analytics. Here, I'll just show you have the ability to kind of really customize this report. You can get rid of entire sections by getting rid of the display section box here. So if I uncheck this, that entire section will be muted on the report. I also have the ability in this report section to come in and customize what I'm displaying. I can select up to 13 items from this list here, or this universe, to populate a custom table here. For the purpose of this example, I'll just kind of keep it straightforward and use what we have set up here. But do want to show you all the robustness of this report here. And also point out that anything with this kind of red box would need to be populated. So for example, inflation rate, most advisors are putting something between 2 and 4 in here. I'll go ahead and put 3. And our Monte Carlo does ask you to select the line style. Here I'll just select chart colors. But really also with the Monte Carlo, what I'd point out is you can think of this as a report within a report. All of the assumptions and data that you enter here is what the Monte Carlo is going to display. So you really have the ability to customize this entire report to make it very unique. And what I'll show you right now is kind of the standard output. And also note that the detailed analytics is the largest report in our set. As you'll see, it just crunches a lot of numbers and runs a lot of calculations here. But again, it comes up relatively quickly here. And right up top, as the title suggests, you're going to get all the details on this portfolio. So right up top, we have the client portfolio versus its benchmark, the return, standard deviation, and Sharpe ratio on both, as well as each component of the portfolio, its respective benchmark, and all of that same information. So really a detailed dive and pretty deep look at this portfolio. Now, some parts of this report will be a little bit of repeat. Trailing performance, I'm sure you're familiar with from the hypothetical. Trailing performance returns down here. Calendar year performance of the portfolio and the benchmark. The portion I really like about this detailed analytics report is risk analysis here. So not only do you get the risk and return graph, you're also getting all the MPT stats on this portfolio. And that's not just the alpha, beta, R squared. We're also giving Sortino ratio, trainer ratio, max drawdown, tracking error, up and down market capture, and then benchmark return and the benchmark standard deviation. So really pretty much as much information as granular as I'd imagine any of your clients want to get MPT-wise on the portfolio.
Great. Hey, Viraj,
Next
real
here
quick on the performance, is one of the parameters that you can set on that previous page where you're selecting the criteria, can you look at rolling period returns?
you actually can, and I'll kind of go through that parameters with you on that. So there's a couple areas where you can put in different rolling return periods. And really, I'd suggest just kind of work with the parameters on the detailed analytics, and I'd be happy to do that with you. We can really kind of customize these reports. So risk analysis here, graphs of 1-year alpha, beta, R-squared Sharpe ratio. Best and worst case analysis, which you should be familiar with from our holding scan report here. Really also unique to this report, MPT analysis on this portfolio. And what I'll point out is all of the MPT analysis here is really driven by this rate of return and standard deviation. That's kind of the engine here for all of the calculations that are going to be presented in the MPT analysis. So coming down here, distribution, returns with 90% probability, showing you kind of where the normal range of returns for this portfolio would be. Again, the assumptions stated here, return and standard deviation. Performance with the return and standard deviation. Again, kind of repeats from other reports here. Theoretical range of returns with a 90% probability. This showing the portfolio theoretically getting less volatile as time goes on. Again, the assumptions stated here. And kind of the inverse of this chart, the theoretical range of values with 90% probability, showing the portfolio growing as time goes on. And again, assumptions are all stated here. Now the macro allocation, asset class allocation, all of this is kind of repeats from the holding scan report. So what I want to highlight is what's unique to the detailed analytics here. Again, country and sector diversification and the overlap from the holding scan. So style analysis here, looks a little bit like modern art, but gives you a breakdown of what portfolio components or benchmarks have contributed to performance over time. So really, this is showing us that the Russell 1000 growth and the Russell Mid Cap have really driven portfolio performance here. Last on this report, the Monte Carlo simulation, showing different ending values. Now, obviously, I use a portfolio with a pretty decent return, but a pretty egregious standard deviation here to kind of show how this Monte Carlo would function. So it gives you the ending value here, given these assumptions, on a 10th percentile confidence and a 90th percentile. Obviously, given this portfolio standard deviation, that's a pretty big spread here. So just to highlight some of the functions of the detailed analytics report here. Now, the last of the kind of standalone reports would be our fact sheets. And again, fact sheets pretty straightforward. But here you have the ability to kind of select which products you want to show the fact sheets for. And you also get a portfolio level fact sheet. It's kind of a neat way to show the client a numerical breakdown of their portfolio in one page. Portfolio level fact sheet really gives you all of the pertinent information in one page here. This shows us the entire portfolio on a fact sheet breakdown with the risk versus return, MPT statistics, historical performance, trailing returns, asset allocation, metrics, macro allocation, top 10 sectors, countries, the equity properties, as well as the top 10 holdings, all of this looking through at the portfolio and pulling all of this information and consolidating it into one page. And then on the product level fact sheet, as you'd imagine, we have all of the product information up top, pricing, ticker, front-end loads, AUM. All the same information that you saw on the portfolio level fact sheet. So the real only thing I wanted to point out here is on our mutual fund fact sheet. You're going to notice that not only do we provide you with all of that information, we also have the Lipper category rankings on the bottom left. So rather than provide our arbitrary star ranking, we're really going to tell you where this fund stacks up against its relative competition in a quintile rank, percentile rank, as well as a numeric rank, and give you the count for the universe of those players in that field. So that's kind of our standalone reports there. Now, the last set I wanted to show you here is kind of some of our comparative reports. So what I've already done is I kind of set up a sample model that's already in the dashboard here. And what I'll do is I can use our compare scan to use the sample client report and compare it against a sample model. So here what I've done is I simply go and check the box next to compare scan, click parameters. I'm going to select the illustration I want to compare the sample client against. I'm going to check here to display the name, and I'm going to go ahead and title these illustrations. So here the sample client, this is where they currently are. The sample model is what I'm proposing. And I have the ability to adjust the pie chart grouping here. So maybe, you know, I trust this guy, and I'm not worried he's going to run off to Scottrade with my allocation. So I'm going to go ahead and actually show the investments. I'm going to save this and build the report. And again, what I don't want you to focus in on is the performance and whatnot. This is kind of arbitrary. I just want to show you the report output here and how it can be used to really win business. So here up top, the investment allocation, where you currently are versus what I'm proposing. Currently, you're in an all-equity portfolio. What I'm recommending is a little bit more balanced. Now, obviously, Cisco and Apple being part of the portfolio I put together in the time frame here, the current portfolio is going to outperform pretty much anything that we could find. But gives you an idea of the breakdown. If these, you know, these charts were reversed here, if you're outperforming, it gives you a real easy way to stand out and show the client that what you're recommending makes a lot more sense than what they're in. You get the trailing breakdown returns on all of these different periods for the portfolio, current versus proposed. You get the best and worst case analysis, again, kind of from the holding scan, but this time you can think of the compare scan as a two-portfolio holding scan here. So really it's going to compare these two portfolios and give you a lot of similar output. So best and worst case analysis, best and worst run. So obviously where you are currently offers a lot more upside, but what I'm recommending is a lot more defensive here. Risk versus return. Obviously currently the client's getting a really nice return. What we're recommending is a lot lower return, but a lot less risk as well. I get some MPT stats on both the current and proposed portfolio. My equity properties, fixed income properties, metrics, top 10 equity countries, sectors, all of this stuff comparing the two portfolios. And then finally, my overlap report. It's really a neat way to kind of highlight the differences in the two portfolios. Now the last report I want to show you is our allocation analysis report. Really what this report does is the compare scan is used by a lot of our clients during the initial client consultation to sell the portfolio. And the allocation analysis report is used in the implementation meeting to really show the client what changes are being made in the portfolio and how they're getting from portfolio A to portfolio B. So allocation analysis report, again, I'm going to click on parameters. I'm going to select the portfolio I want to compare this against, which is our sample model. I'm going to go ahead and queue up the titles again here. It's current versus proposed. On the asset allocation section here, I'm going to go ahead and show the category as well as the investment level. I'm going to get rid of subcategory and asset classes. I feel it gets a little bit redundant, but you can feel free to share that with your clients. And I'm going to go ahead and put this layout side by side. I'll save that and build the report. And fairly quickly, I should have my report output, which shows me these two portfolios and really how to implement what I'm recommending versus where the client is currently. So the first page again here on the category allocation analysis shows me we're going from an all equity portfolio to one that's a little bit more balanced, 75-25 here. The return and standard deviation parameters are stated below. Next page shows me the actual positions. This is where you are. This is where we're headed. And this page here actually is kind of neat, creates like for me here, showing me exactly what needs to be bought and sold to implement this portfolio. So I need to sell out of these positions here, and I need to purchase these positions here. All kind of laid out for me here in a neat little trade ticket. And finally, I also have all of the analysis on this portfolio to back up why we're making these changes. So a lot of this repeats from our other reports, but you have all of the fundamental information here to back up why we're making this change in the portfolio. Trailing performance, best and worst case analysis, MPT statistics, the whole nine here. So really, I wanted to quickly take you through the full gamut of reports and show you what our system does here. Is there any questions I can answer for you guys?
I don't think I have anything. I asked the few I had along the way. It's really helpful to be able to see all these different outputs, and really what I think we need to do is think through all the different usage. We got a few different business units here internally. I mean, obviously this is perfect for an advisor, prospect, client relationship. But then we've got advisor to advisor. We've got
Sure.
publishing relationships. We've got a bunch of different ways we can think about using it. So it's interesting.
Yeah, no, absolutely, and I would implore you that really, if you can see how this tool could be used in any of those ways, please let me know if I can maybe demo this in another way, or if there's functionality you think I didn't highlight that might be more specific for a different business unit. I'd be happy to set up a call and kind of walk you folks through that as well.
Yeah, no, that'd be really helpful. Thank you.
Yeah,
I
absolutely.
guess one question is, it's probably obvious, but I guess I'd ask, on the portfolio strategy side of our business, we had your development group and design group build out like a custom fact sheet for us for some of the
Sure.
fund strategist portfolios that we run there. I guess, if we wanted to do that on the mutual fund side of our business and kind of automate the process, but we didn't want to use the, generic AdvisoryWorld fact sheet report, we could customize that as well.
Yeah, I would imagine that since you guys have already kind of done some of the custom development on those fact sheets, that it wouldn't be too difficult to kind of migrate that over to the mutual fund side as well. Again, that's a conversation to be kind of had with the sales and development team, but I would imagine that would be entirely possible.
Okay, cool. Yeah, sounds good. All right, well, I don't have anything. Matt, do you have anything?
Yeah, that was good. I took a whole bunch of notes. This is exciting as it can be. That's very good, yeah.
No, absolutely, and we're excited to be working with you guys as well. So if you don't have any questions, I certainly thank you for your time. If anything comes up, shoot me an email, give me a call. My number is 800-480-3888. I'm at extension 105. You guys should both have my email addresses, but just in case, it's vkumar, VKUMAR, @advisoryworld.com. You can always email support@advisoryworld.com. And yeah, as questions come up, please reach out to me, and we're excited to work with you guys.
Great, thanks, Raj. If you can email me the recording, I'll send it to the people that Josh invited and maybe are stuck.
Yeah, absolutely. I'll get that.
We'll figure it out.
Yeah, I'll get this converted to a link and shot over to you as soon as I can.
Awesome. Thanks so much for your time.
Thank you.
Thanks, Chad. Thanks, Matt. All right, bye-bye, guys.
Bye-bye.
Bye.